Hey, it's Melissa with a weekly update to my $100,000 stock experiment. Year 3, Week 7, ending May 29, 2020. I'm sharing my buys and my sells with you, but I'm not making any recommendations. You need to make your own decisions on what you buy and what you sell and how you manage your portfolio. According to the IBD at investors.com, the market is in a confirmed uptrend. The S&P 500 index looks strong. It's finally crossed above its 200-day simple moving average. It's holding above that 3,000 mark. And the 50-day simple moving average is pointing up. It's that red line. The volatility index, or the VIX, the lower the better on this one. For over 3 months, it's been above 24. I like this to be between 12 and 16, so this is really high for me. But it has been holding steady the last 2 weeks in the high 20s. Every time I buy a stock, I set a stop limit order as my floor. Initially, it's 8%, and then I can raise it up, but it never goes down. Stocks sell when my floor gets triggered. I'm calling this the big sell-off. 11 of my 13 stocks sold this week, 5 for a loss and 6 for a gain. Here's the stocks that I sold for a loss this week. Alt, ALT, just ignore that too. I just needed to make them unique for reporting purposes. Beam, Chegg, again, ignore that number next to it. Now, and Twilio. All of them are below that dashed gray line, which means that they sold for a loss. And you can see the ones that had been up before, like Twilio had a nice gain last week, 9%, and then I sold it for a loss. And here's the bar chart for the stocks that I sold for a gain. Again, I have a gain in Alt, Chipotle Mexican Group, Datadog had a nice gain, so did DocuSign, Shopify, and Vive was my smallest gain. The first sign of trouble this week was on Tuesday when I got stopped out of Beam for an 8% loss. I had just held this stock for a week. The second sign of trouble was on Wednesday when my stocks started selling so fast I couldn't even keep track of them. Twilio dropped below my floor, and I took a larger loss than I wanted to. I had held this just about 2 weeks, and I had a 3.1% loss. Chegg also triggered a floor on Wednesday. I had a 6.8% loss on this, and I had just held it for the 1 week. I did buy it back on Thursday, and I have another loss in it, 0.6%. Hopefully it will come back. So this is one of my current holdings now. ServiceNow, this is the second time I got stopped out in 2 weeks. I did have a nice gain before. My sell that I sold 2 weeks ago, I had a 20% gain in. I wouldn't mind holding this stock again, but I would probably need to use this 31-day exponential moving average as my floor to avoid getting stopped out. Vive. This stock is also volatile for me. It has big daily swings. Even though it's been riding that pink 8-day simple moving average, the length of the bars is very high. This stock dropped, it recovered on Thursday, and then soared on Friday. I have a 2% gain in this in 4 weeks, and a gain is a gain, but I really like my stocks to give me a gain of 1% a week. Chipotle Mexican Group, this stock dropped and didn't really recover the next 2 days. I held this stock for 5 weeks, but the upward momentum was just in the last 3 weeks. I did have a nice gain in this, 10% in 5 weeks. Shopify, this also gave me a decent gain, 8% in 3 weeks. Not stellar, but decent. I had 2 buys in this. My buy 2 just gave me about a 1% gain in a week and a half. DocuSign, I had a really nice gain here. I held it, my B1 6.5 weeks, and it was up 30%. I held my B2 for 4.5 weeks, and it was up 20%. And I held my B3 for a week and a half, and it was up 3.5%. Datadog, this is another stock that sold on Wednesday. It recovered the next day, and I might want to buy this one back too. It'd be healthy if it held at this point for the next few weeks, if it went sideways for a while. I had 2 buys in this. One I held for 3.5 weeks, up 37%, and one I held for a week and a half, which I have a loss in, a 4% loss. Alt. This stock is crazy. My first buy was on Thursday, 5/21. Last week, at the end of the week, I reported it was up 19% in 2 days. The market was closed on Monday. Tuesday, the stock gapped up at the opening and kept climbing. I kept raising my floor on Tuesday. First, I raised it up to $6.95, which was the close of the previous day. That would have given me a 19% gain. The stock continued up. When it was up 24% for the day, I raised my floor to $7.29, which would have given me a gain of 25%. And then when the stock was up for 39% for the day, I raised my floor to $8.74, which would have given me a 49% gain. My floor was triggered and it actually sold at $8.75. I held this stock for just those 3 days and it was up 50%. I bought it again on Wednesday and it failed in the first 5 minutes. So I have a loss. 8.5% loss in that one day. And I bought it for a third time on Thursday. My floor is at $8.27 up to $8.37, basically break even. And I'll look for opportunities during the week to raise my floor. I've held this purchase for 2 days and it's up almost 11%. Every week I review my charts and see if I can raise my floor. Adobe. This is the stock that I've held the longest. I've held it for 4.5 weeks and it's up 9.3%. I was able to raise my floor up to that 31-day exponential moving average, that diagonal blue line, and my floor is now where that dotted yellow line is. I'm wondering if I should make a B2 on this, and I think yes. The stock is near a 52-week high and it had super nice volume on Friday. Chegg. This stock I got kicked out of Wednesday when all software stocks were going down, or it seemed all software stocks were going down. And then I repurchased it on Thursday. I did leave my floor at my 8%. I've held this the 2 days and I'm down 0.6%. Dynatrace, also a new purchase for me. This is an IPO stock. It's just starting to get that 200-day moving average on there, that white line. I like that it seems to have been going sideways for the past 8 days, doing a price consolidation, and it had super high volume on Friday. I did leave my floor at 8%, and I've held this the 1 day, and I'm down 0.5%. Don't let a double-digit gain turn into a loss. Slack Technologies, stock symbol work. Finally, this stock took off this week. It was up over 10%. It did have a hard day on Wednesday, and then it recovered. I did raise my floor to the 16-day simple moving average. Earnings are on Thursday, June 4th, after the market closes. I typically don't pay too much attention to earnings. If I have a stock that I like and I think is a strong performer, I'm just going to hold on through earnings. I've held this for just over 3 weeks and I'm up almost 13%. And I like to add to positions as they prove themselves. Blackline. This is a new purchase for me this week. I bought it on Wednesday when the market tanked before it started going down. Basically bought at the high of the day and it did not trigger my floor, luckily. I was able to raise my floor up to that 16-day simple moving average, and I also made a B2 in this stock. I'm not sure where I got the stock idea. It was on my watch list, and on Tuesday night I discussed my watch list with Franca, and it was on her watch list too. So we both liked the stock. I think she bought it also. On MarketSmith, it has a blue dot and it's near the pivot, which is the ideal buy point according to MarketSmith. So my B1 I have just held for the 3 days and I'm up 6%. My B2 I've held for just 2 days and I'm up 0.3%. I'd like to make a buy 3 in this when it reaches 75.90, which is 2.5% above my B2 price. This is my current holding bar chart. Each bar represents 1 week. The dashed black line is my $10,000 purchase amount, and the yellow line at 9,200 is my 8% floor. Adobe in the red I've held for 5 weeks, and it's up about 9%. Alt, I just held the 1 week, and it's up over 10%. And over on the right, you can see work. I've held for 4 weeks, and it's up about 12%. Here's the weekly percentage change of each of my stocks. Each box represents 1 week. The stocks I've held only 1 week, it's not the gain or loss for the week, but since my purchase day. Chegg, DT, and Adobe are all showing in the red box. That means they underperformed the S&P 500. I sort it with the losers on the top, wanting to focus on those losers. I weed them out, so I just have high performing stocks in my portfolio. And my current dollar gain in each of my B1 purchases is also sorted with the losers on the top and 1 box per week. The industry breakdown shows that I'm most heavily invested in cash. I have $88,000 in cash, so I can look for some more stocks to buy. I have a big chunk in software, $48,000, with 2 buys in Blackline and just 1 buy in Dynatrace, Slack, and Adobe. I have 1 medical stock and 1 consumer stock. I had heavy selling this week, and I lost over $6,000 on stocks that I held last week and sold this week. I did have some gains, and all in all, I went down to $157,827. That's my total value of my $100,000 after 2 years and 7 weeks, versus the S&P 500, which is up to $114,607. Year 3, going all the way down to the bottom, at the end of the week, 5/29/2020, the S&P 500 for this experiment year is up 9.1%, which is exactly the same as the Melissa method. My portfolio took a 3% loss this week, and the S&P 500 was up 3%. Thanks for watching. Keep an eye out for my next episode, or better yet, subscribe to my channel, The Melissa Method. Don't forget to hit the bell if you want an alert when I post a new episode.